Welcome to another episode on the Coin King channel. I am your host today, Down to Crypto TA. You can follow me on Twitter at Down to Crypto TA, and also be sure to follow the Coin King, um, Crypto Ken. That's going to be his name on X there. Okay, so today we aim to resolve the lingering uncertainty surrounding the SEC's decision on the Bitcoin ETF, an event that has eagerly eagerly been anticipated. Personally, I'm enthusiastic about moving forward, and leaving behind this anticipation of a driven news price action. It's really been frustrating for me, and I'm sure it's been frustrating for you as well. So, what we're going to be discussing today is we're going to be delving into the daily, the weekly, and the monthly timeframes for Bitcoin, exploring potential scenarios depicted in the charts. And as you can see, I already have my daily chart loaded up here. We are getting a little bit of a dip, which started yesterday. And I'm looking at some of the potential levels that we could see here. Now, I just want to take a step back for just a moment. For those of you who follow me on X, you may recall my expressions of of concern back on December 7th, when I first identified signals of a pending correction in the charts. And if we take a look here, December 7th, we were at this candle right here when I made that first post, just letting you guys know that there were some signals in the chart suggesting that a correction was due, and that it was likely to be seen within that particular week. Now, from there, just a few days following that, you can see that we did get a big push down, a relatively large push down here, which would be more outstanding on your 1 and 4 hour chart versus your daily chart. But that is a pretty big candle there on your daily chart. And from there, we attempted to get back above this high here, which we were unable to do that. But we had not put in a new low just yet. So the trend, still up. And from there, I also highlighted a crucial weekly level that the price needed to maintain above from that point, since we didn't break that high. And if we take a look here, it was this weekly level right here that I posted on Twitter, stating that levels to remain above on the weekly close was going to be that, and that was for 1217 close. We did manage to stay above that close. We wicked down below it here, but as long as we didn't get a closure below that, then everything was fine in regards to that. Let me hide that. Now, when we got this swing right here, actually prior to the swing right here, what I was mentioning to you guys is that I didn't see anything on the daily chart or the weekly chart that suggested that the up thrust here was relevant to those time frames, and that it was price action coming from your lower time frames, such as your 1 hour and your 4 hour chart. And all that implied was that the move up was likely not going to be sustainable. And so we got the move up, and you can see how we got the rejection here. Now, there were a lot of claims on Twitter that the move came from some random post. I honestly can't even remember who the post was done by. But it was in the charts. It was very relevant in the charts to me. And one of the things that I did say on Twitter was this is not going to end well. Show you here. Right here. This is the moment here where we got that move up for that first move up here to break the high was here. We did so with bearish divergence, as you can see, far from that pivot here, far from the pivot further left as well. But this is your extreme volatility here, this yellow line you see right here. This yellow moving average you see right here is your extreme volatility. And so when price broke above this extreme volatility, it had no place to retrace back into except for the extreme volatility. The extreme volatility gave it the momentum to make the move up, and it also gave the momentum for the drive down. You're far from your implied volatility, which is a lot more measurable than your extreme volatility here. And show you that here again on the chart. You can see right here. Actually, let's go right here. Right here, this candle right here is the point where you crossed above your extreme volatility. And then here, this candle right here is where you are in between. It's really hard because, your clicks are never in between your daily. But you can see where you hit the extreme volatility coming back down. And so you ended up getting this big candle right here. And we're pretty close to hitting extreme volatility once again right here at 115 there and 114 there. So across there, you could see a bigger move back down, which is where we're going to start getting into our levels here. Because thus far, something that I said on Twitter also, I keep calling it Twitter, but it's X, is price generally has two objectives: to put you in the market and to take you out of the market. And the way it does that is by either looking for fair value to put you in the market or for liquidity to take you out of the market. And these moves right now for me have only been liquidity because we have not come back into any fair value, fair value ranges. And something that I like to look at on the chart is with our fair value blocks, the 50% or the mid range of those fair values. And as long as we remain above, meaning that we don't close below or we don't close above, a closure above it would mean that I would be looking for prices to go higher. And even though you got this dip back right here, we still went higher. And the same scenario would apply here. If we get a closure below this midpoint of this fair value gap, actually not this one, because this one right here is already played out. So we would be looking down here. So if we start to get a breakdown here, which this fair value gap is currently acting as support, or this range right here, which is your order block, is acting as support. It's also a weekly range as well. So I would probably lean towards the weekly range first because that's more valuable to me than a fair value gap, but it's also your weekly range. We lose this weekly range, we come back below it, it could act as resistance, and you could be looking at coming down here into this area of imbalance here, which you have quite a few areas right in here. It's really hard for me to tell which one of the fair value gaps would be respected. So I just have an entire zone right here that is dedicated to this as being your imbalance zone right here. That's also going to give you your lower low should we start to break down from here. Now we do have the ETF approval. Once again, today we do have the ETF approval or denial taking place, which a lot of people assume that is not priced in. I would have to say that is very much priced in. If you can make the assumption that a tweet can drive price down to here, Gary Gensler, SEC, denied the Bitcoin ETF. If you can assume that that drove the price down to here, then you can also assume that it is factored in. There is no way you start dropping and it's not factored in. You either want to be a part of it, you either want to own Bitcoin, or you don't want to own it. Okay, so this, clearly is factored in. Same scenario over here. If you got news that it wasn't going to be approved, and then you got news that it is going to be approved, and you start to get a drop off of that, it's very much priced in. So I just say to you, believe in what you see and not what you hear, especially when it comes to a lot of the influencers, a lot of the plants or paid influencers, sponsored influencers, you know, that's going to be their job to tell you all the wonderful things about price action and never start telling you the bearish scenarios until after the fact, after it's too late, after you've been trapped, you know? Okay, so something else here. Let me show you those levels here. I usually post my levels quite a bit so everyone can see them. So you can see here that, we are slightly below this weekly level here that we broke above, and falling below it could, potentially act as resistance, but we still have quite a few hours to go in the day, and we do still have the ETF approval announcement. All right, I'm gonna go back to my fair value gaps here. Actually, no, I'll keep it on there. All right, so moving averages, something that I also mentioned to you guys on X is the moving average. So we have not converged this closely. This red one here is your 50-day moving average, and the blue one here is going to be your 200-day moving average. We have not converged this closely in this trend in a very long time. The last time was here where we got the cross up, and from that cross up, we've rallied significantly. And now we're converging here. They almost look as if they're welded together. That's a bit concerning for me. That also is a telltale sign of the weakness in the chart. Now, I will say that price action is above both the 50 and the 200, and they do have an upward posture. So the trend is your friend, and I'm not here to say that the trend can't go higher, being that we are still above this 50 and this 200 moving average, and they haven't postured to the downside just yet. So that is a critical component in saying that this trend has come to an end, at least in the short term, because I am pretty bullish on Bitcoin. And how could you not be when you're looking forward to an ETF approval? Now, what happens if it gets denied? That's going to be a whole nother story. Okay. So let's just say that we lose this right here. We finally lose this 200 and this 50. We get that downward slope. We come into here. This will be our first area. That gives us that lower low. And of course, we'll be looking for a lower high to follow right behind that. Now, that's going to take me over here to our weekly chart, because this is where I'm getting all of my signals from here. And that's a pretty nasty wick. If you look here on the weekly chart here, you are inside of this order block right here, just slightly below the previous high over here. So you see where you would have your breaker structure would be at 48,222. That way you have your breaker structure. Market may not be ready for that just yet. Maybe it's not. I know that so many influencers are looking for us to hit the golden pocket, which we are eerily close to that. I don't even think I have that pulled up here. Let me turn that off. But let's see. Golden pocket. I thought I just had it on here. I got so much stuff on here. It's hard for me to, and I have a hard time seeing. Oh, right in front of my face. Let me extend that over. All right. So golden pocket is right here between 50,200 give or take and the 48.5 give or take. So I know a lot of people are anticipating this last little, I don't know, maybe a 1% move up is not the biggest deal for me. This extra 1% move up is not the biggest deal for me. My thing is reading the signals, not denying the trend, which is an uptrend because we haven't put in a lower low just yet, but reading the signals and knowing that price can reverse quickly. And by quickly, I mean a rapid drop, and you're not going to be able to get in and out so easily without losing some money or leaving some money on the table. So, I am still long. I opened my last long position right here before we got this move up. I held it through this little dip right here because actually back when we got this dip right here, I said that we would be coming back down in this zone right here, but I didn't know from this point where price was going to go. I was at a loss. And obviously we got the pump. So that is that. So we are hitting this order block here. If we are to get above here and to come into this golden pocket zone, I would be looking at potentially. Let me turn that off. I'm going to turn off those. And I have my monthly fair value cap zone right here. So this 50,716, that is what I would be looking at for price to, well, actually right now you're getting rejected off of this. This is your monthly fair value gap. You actually just tap the bottom end of that fair value gap right there. And again, the midpoint is going to be that price there, that 50,716. So if you move beyond this area right here, then I would be looking for you to either come up to the 50,007 and not the exact golden pocket zone, but the 50,007, maybe even wick above here for liquidity and then get a sharp move down. If that is to play out, if that plays out, that would probably happen with the approval. And from there, we would start to fill in some of these fair value gaps that we have not touched just yet. As you can see here from the monthly fair value gap, you can see that price has not dipped back even to the 50% level. So again, price isn't looking to give fair value, or the markets aren't looking to give fair value. The markets are looking for liquidity right now because those are your only two options. So we get the liquidity here above this 50. We leave the wick there, which means that at some point we're going to come back and revisit this area, right? Once we start to get more money coming in and people interested in buying the ETF because they feel safer about buying through that form of exchange versus what we've all come to know. So that is going to be that. Now, I'm doing a little hopping here because I do believe that if we fail to hold support here, now we have to contend with this first. We start to get a closure below the 39,000, then I would be looking for prices to come down to this next level right here. And we don't hold 36, then okay, we're making our next move. So now we're here. We're back at these tops. Maybe there's a little liquidity sitting right here. Generally, where you have double top set, you have liquidity. I would assume that most of that liquidity was taken with the move up. But then you lose this zone. You'd be looking at this level right here. And this is going to be your bottom end again. When you make double bottoms or you make double tops, that's a clear sign of liquidity being in those zones. That is going to be your confirmation that our rally is not a bull market rally. It is a bear market rally. And I am not the best when it comes to Elliott Wave, but that would imply that this was your 1, 2, 3, 4, 5, or your 5 waves down here, and then your ABC correction up, and then you would start another 1, 2, 3, 4, 5 waves down. Do I think that we take out this previous low? I don't. But as long as there's as long as there's a range between where we are, between this high and this low, they can both be taken out. And that's just a fact. Like we have an idea in our minds of what we would like for price action to do. And then there's what price action does. And we can't really say that it won't happen or can't happen. We can just say that we don't believe it will. And that's it. It's just our beliefs. It's just looking at probabilities. And those probabilities would change if price was to fail to hold these highs and start to look at this area right here. And then all of a sudden, Capo was right. Capo was right. And we're going lower. And this was just a bear market rally. Okay, so those are some of the levels for you guys to be keeping your eyes on. Keeping your eyes on. And if you don't know how to draw fair value gaps, and I'm going to show you from the monthly chart because it's a lot easier. And as you can see, this is a really strong monthly trend. Really strong monthly trend here. I was a little skeptical when we got right here. I really was. We'd already gotten the confirmed reversal signal right here. But something I didn't pay attention to is that we did not get it here. And that is what I've been cautious about this time. And I'll show you that back over here on the weekly chart when I go back over to that. But I'm going to show you right here. If you don't know how to draw your fair value gaps, it's pretty simple. So you're going to have a middle candle like this, and you're going to have 2 candles on either side, left side and the right side. You got to have both, okay? And it's going to be where you have a gap between the wicks. That is going to be your fair value gap. So you would just draw from your left high wick to your right low wick, and that gives you your fair value gap. And you can do more research on what fair value gaps are. They recently become extremely popular. But it's just like a regular gap that you would have on a chart, and not all gaps are filled. Okay, I can pretty much guarantee you that this gap is going to get filled, and potentially this gap is going to get filled, and we might even come back down to this gap right here because we're talking about support and resistance as well. And you have a order block here where you have this fair value gap, which makes it a more premium fair value gap for us to come back into. But that is how you would draw out your fair value gaps. And I'm going to show you back over here once again. Let me come back over here to the weekly chart. So I've been very cautious about this because I missed it on the monthly time frame when we got this drop down right here. And I didn't quite understand where price was going to go at that point. So we'd already gotten the sell signal here, or the potential reversal signal right here on the stochastic here. But what we did not get just yet is across here on our cumulative volume here. So that would be, even though it's red and it's showing that we're getting some sort of a correction right here, or that we're bearishly trending. And bearish divergence can take some time to play out. So never just take a trade simply because you have the bearish divergence. You do want to be at a key level, and you do want to have some other confirmation along with that. So we haven't got this cross just yet. We are eerily close to getting it, and it's going to be when we get this cross right here that I can say with certainty that this trend is going to reverse. And then we'll be looking at these levels, these potential levels, particularly this level here where we have this high top over here, and then this level here where we have this double bottom here. That's going to be extremely important. Another signal that we had not received just yet was the one here on our jewel indicator, which you can see here. We came eerily close, but we curved up. So we ended up treating our IV as a level of support, and we got the curve up right here. So I'll be looking for this to cross down as well. Now we actually did briefly break below this. That was when you seen the dips happening on a lot of the altcoins. We briefly broke below it. So once again, still very close, but close is not confirmed, and we do want to get those confirmed signals. I love to catch the top. I really would love to catch the top. I always strive to catch the top, but catching the top will get you jacked up. You will be giving money to the market, and none of us are here to give money to the market, or at least we're here to keep the majority of the money anyway, make some gains and keep as much of it as we can without giving it back to the market. So that is that. I did advise do not take a trade set up long or short in this level is what I advised, because the market is not offering fair value. And as far as your daily chart is concerned, you're far from any fair value on your daily chart. You don't get there until you get down here, until you break a new low. And by that time, everybody knows, right? Because now you've put in a lower low. And that would only confirm a daily reversal. And we won't actually confirm a weekly reversal unless we break these lows right here. Which no one is looking forward to. So I don't know. For me, the trend, once again, the trend looks pretty strong here on the monthly chart. Eerily close over here on the monthly chart for some sort of doom and gloom. Sometimes it happens like that. Sometimes it doesn't. Let me just drop these here. Sometimes it happens like that. Sometimes it doesn't. So something that I look for, and I know you guys don't have these indicators. They're mine. I just took some previous indicators and did an upgrade, basically. Made them more useful to me. So sometimes you'll get that cross down here on your signal line, and then you get nothing. Like here, you got that cross right here on the signal line, and you got nothing. You got divergence all the way up. You don't break it until you hit here. This is when you cross over your IV line here, that you started to get that pull down. And then, of course, you got the bearish divergence here, retest of the highs with bearish divergence. And you cross once again and you come down. Let me take a look at this right here. Yeah. So I don't think I looked at it on the weekly chart. Okay, so this is one of the only reasons why I feel like price could potentially come back down here and retest these lows down here. Is because this 50 MA is lagging so far, but and it's good when it does. Let me start there. It is good when it does because it means that the trend is strong. But it also implies that price can pull back into it and retest it as support. So that is the only reason why I will be looking at that double bottom, that $25,000 range as a potential place for price to pull back to if we were to get a massive sell-off. And then we'll see how true this holds up. Yeah. So we'll see. We'll see. We'll see how much excitement comes around the ETF approval. Same thing over here. The 200 on the weekly chart is sitting down here around relatively the same level, 24 to 25,000 by the time we get that weekly close. Price can drop below. This 50 can move up relative a little bit more. Or maybe it doesn't have to move up too much more. Maybe price just decides it wants to break down below that, and then we would be revisiting these double bottoms down here. So that is my worst case scenario. Worst case scenario for me. Not down here, but here. This is my worst case scenario. My best case scenario is holding above this level here. That is my best case scenario. I did say I was looking for price to come back down here to this zone here. Let me just do it like this. Yeah. Actually, I might want to bring that up. Well, right in here. So I was saying about 37 to 35,000 would be the target for your daily correction. But moving past your daily correction, then I would be looking for a weekly correction to come back right in here. But we got to test that $37,000 to $35,000 range first to see if we're going to hold up there. And that's as far as we pull back before we continue this move up, which I do believe that we will. But I just want to put that out there for you guys to know what the worst and best case scenario could possibly be for the Bitcoin move. And if you are long Bitcoin and you manage to get it from down here, or I don't know, years past before, or anywhere up in here, or anywhere down in here, then congratulations to you. You have made a massive return. But we are very, very, very extended, and you can extend even more. That's a fact. You can extend even more. Here in the Bollinger Bands here, we are pretty extended here. We did come, actually, from where we got this run of the mill right here, we did fall back out of that, but yeah. So this week just coming up into these areas of deviation, that is significantly high. Bitcoin, as far as I can tell, usually doesn't extend too far outside of this purple zone here, or even outside of the orange zone. It never generally extends too far outside of the orange zone before it starts to correct back down. That was a small one, but again, it's a lot of signs in the chart that just suggest that, this could be Wyckoff. This could be a Wyckoff distribution. And this is possibly, a top end for this correction. And it honestly hasn't been anything spectacular. These moves here, what is that? A 2% move, 2.68% move from there. $4%, that's a little bit better. 4% of a move. Definitely a lot better. Definitely got the volume on our daily chart here for the move. Diverging, of course, once again, bearish divergence in the move. Liquidity grabs, but they don't compare to when we were getting these previous moves. Let's just go from the low to the high there, 32%. Like, these are the kind of moves that we were putting in prior to putting in these petty moves to the upside, which are I have to say their squeezers don't last very long. They really, well, it's enough volume here to, I guess, sort of debunk that. I'm not sure, but no volume on this one, on this first candle, which is where I would assume we would have topped out because we hit the top of this 50 and we didn't have the volume, but that didn't happen. We got another candle that came in and drove the price a little bit higher. And they've been very good at propping price up at these levels because for me, the chart is clearly saying I want to go lower. And you know what? I think I've spent enough time on this video. Enough time on this video. So that's where I'm going to end it. And if anything different comes up, I will be back. I will be back. You can catch me mostly on Twitter. I will be back. X. X is X. It is so hard to get used to saying Twitter. I'm sorry, X. See, now I'm completely confused. But I appreciate your time. Please do hit the like button and subscribe to the channel. Something that I always do when I go to someone's video, I instantly hit the like button. Now, if I don't like what they presented to me, I don't take back my like button. I just don't go back to that channel anymore. And that's just me. But I do like to give people credit for their hard work. If you didn't need to see the video, then you wouldn't have showed up for it. So please, respectfully, hit the like button, help get the content out there, help the Coin King to grow his channel. That's very important to him. He's been in the game for several years now, bringing you guys a lot of wisdom. He's really good at what he does. He's not a technical analyst, but he analyzes the charts in a different way because there's more than one way to skin a cat, right? And no animal control people come after me or pet lovers. Don't mean that literally. But, there are several ways to draw the same conclusion. Your technical analysis, the way that you view it does not have to be the same, and you can still reach the same point. And that is what he does. And he finds a lot of gems in the market, and he talks about those gems. And he's been relatively successful in that way. And he's one of my biggest supporters, and I'm here to be one of his biggest supporters. Because he does give me a lot of love and a lot of shout outs on X. And I really, really appreciate it as he's trying to help me grow. So I will be looking forward to coming back here and doing more content. Maybe not being as nervous as I am, but I am very nervous when it comes to public speaking. And I used to desire to do public speaking back in the day. Yeah, my nerves are not here for this. So, but I will be back with more content. We've been working on a couple of things. And so until next time, I really appreciate you being here and have a blessed day.